So this is my first trial recording of day trading the ES, which is going to be the ES mini S&P futures contract. So I use the stochastic indicator, which is a momentum indicator. I use Fibonacci levels. And inside here I use the Bollinger Band, which I have a 10 trade EMA set up with a simple moving average along with my midline, which is your 20 simple moving average. And so by using these three indicators and following Fibonacci levels along with my momentum up or down, I can make more positive trades off the ES on a daily basis than negative trades. So right now, currently, I have drawn a long play on the ES. And the reason I drew a long play on the ES is starting over here from 3 o'clock this afternoon, the ES hit a low for the day. And so now we're trading after hours. Currently I am in a demo account as I'm just practicing all my video recording. So following the 15-minute chart, each one of these candles is 15 minutes. The ES decided to peak out at 9:30, and the high at 9:30 was higher than the last highs back here at 2:15. So I'm creating a higher high than I did before. So my momentum, you can see with the stochastic indicator, my momentum slowly went up and I created a higher high. So drawing Fibonacci retracement levels, I would draw a long play based off my previous low. There are some ups and downs, dipsy doodles inside as this plays along, but for the most part this is a downward to an upward trend. So I've taken and drawn my long play. So I start here at the bottom of my Fibonacci with my Fibonacci retracement indicator, and I grab it here and I drag it up to my high, and it gives me my levels. So with my standard Fibonacci, I end up with 0%, 23.6, a 38.2, a 50%, and a 61.8%. Depending on what trading platform you're on, you have a 78.6% level in here, and then you have 100%. I'm using Apex Futures Trading, and so Apex Futures allows me to use 8 Fibonacci levels, and so I modified my Fibonacci levels. I removed my 78.6, and then I added a negative 23.6 and a negative 61.8% level. These are price target levels based off of retracements. And so what we shoot for is we're shooting for, on a move from the low here to the high over here, we're expecting a retracement back to the 50% level or the 61.8%. If you've done any studying on Fibonacci, the 61.8% is considered the golden ratio, and everything likes to pull back to the 61.8% level. And so when we look at this play from our 3 o'clock low up to our 9:30 high, we can see that the price has retraced itself back to our 50% level, 2708.62. So the ES trades in quarter ticks. So we're looking at 27.0850. And it actually went past the 27.0850, which is my green line, and it dropped back to the 61.8% level, which is the 27.0777, or essentially 75. We can see that it did pull back down a little further, so we're looking at 27.07, so three quarters of a point or 3 ticks below what my 61.8% is. And so if I was trading this, I would be getting this set up for a long play, seeing that my momentum is still going down, but I'm waiting for it to turn to the upside. So as you can see, my momentum starts turning to the upside. So I would be considered taking a long play right in this area off of my 50% level. What I like to do to make sure that I have confirmation that my momentum is changing direction, with the stochastic indicator, anything below 20 is considered to be um, a low downward momentum. Anything between 20 and 50 is still technically considered bearish, but your momentum is still pulling up. And anything above 50 to 80 is considered bullish. And then anything above 80 is to be considered to have high momentum. So I actually took a long play right off of the change in direction, right in here as my stochastic started changing direction to the upside, off of my 50% level here, 27.0862. My average right here, I took a long play 27.0850, and I actually have 3 contracts currently at the 27.0850. What I like to do is I like to go to the 5-minute chart off my 15-minute chart. When you go to the earlier time frame charts, you can see things happening a little sooner. But I do like to make my trades off of the 15-minute chart. So if I switch to the 5-minute chart, all my Fibonacci levels are still up. My Bollinger Band is still up here in the background. And as you can see, my stochastic or momentum is continuing to rise. So right here, this dotted line is the 50% level. So we crossed over the 50% level, and we're heading towards the 80. And you can see that my price did retrace back down, to the 61.8 after I decided to take my long play here. So there was a period of time where I was red on the trade, but if you can see here, even though I'm red on the trade, my momentum is still curling to the upside. So I didn't panic with this. I stayed long with it. And as you can see right now, I'm up $225 on 3 contracts. And my momentum looks like it's continuing to rise. So this pulled back to my 50-61.8% Fibonacci ratio. Now my price target, the price target with Fibonacci ratios is either a retracement back to the 0%, which would be 27.12 area, or if I zoom out a little further here, you'll be able to see it. Maybe not. Maybe let me go to the 15-minute chart. So if I go to the 15-minute chart, you'll see that my price target is going to be my negative 23.6 Fibonacci area, which is 27.1396. So I would put my price target at 27.1375 or 27.14. And if it breaks past the 0 and heads to the 23.6 level and blows past the 23.6 level, then my next price target is going to be the negative 61.8, 27.1673. So that you could set your, since I'm going long, I could set my sell up for 27.1650, or I could go 27.1675. Depends on how conservative I want to be. And as I'm letting this play out here, now I'm still up $225 with 3 contracts. My momentum is curling towards the upside on the 15-minute chart. On the 5-minute, I'm still below 50 on the 15-minute chart. On the 5-minute chart, when I switch back to that, my momentum on the 5-minute chart, things are happening faster because there's more data. Every one of these candles is 5 minutes worth. And I just broke my 80, which is something that you like to see when we're going long. Anything above 80 doesn't necessarily mean that it's overbought. It just means that your momentum is strong when you're using the stochastic indicators. The old adage with the RSI that anything over 80 is considered to be overbought, then we're going to end up turning to the downside, which is somewhat true, but it's somewhat not. It can stay above 80 for quite a long time if momentum decides to stay high, which, since we're going long, we like to see that momentum's above 80.